Currently backtesting using past data to keep optimizing the system, but today we're gonna talk about the GDP or the pre-GDP price action for gold. Here in w.com in the blog site you will check my current post will be covering today's news that we had some some orange folder or the consider mid impact. Usually we only go for red impact for crucial moments, like yesterday we had the PMI that you also can check here in the blog post. It will take you there so you can check more or less the relevant information on why gold was bearish the past days and the contraction or the retracement back to the bullish zone. I'll explain in a second why the current price action is very important. But we were having some yellow folders here. You can see consumer confidence very relevant, especially to keep track of how unemployment is affecting or the job opening are beneficial for the consumers. You can see tons of people in the malls, you can see people going to cinemas, but the reality is per data this is going low or the sentiment is going low. So as you can compare it also with new home sales, people that are not buying or they're not wanting to throw money into uncertain environments or possible recessions. So this just creates more and more panic among the chillers because data is real. This is something we can measure. But the important thing also will be to keep an eye on the final GDP and the possible unemployment claim that can be higher again than the previous. If we remember last week we had also the unemployment that came little higher but lower than the forecast, but it's not relevant in this point because it's unemployment. So you really expect it to stay flat or controlled or go lower, but sadly at this point it's not going down. So we will be keeping an eye on those two on Thursday. Currently the price action it's going down, so I marked this zone. This is the new zone. This was a previous zone that I already had marked, but I pretty much added the yellow area because this is already a strong resistance. As you can see, price pretty much chef keys this area, nothing relevant. But the red area is something that we need to keep an eye because there's the zone that you don't want to position yourself. As you can see, price stays not very long and it's already key that is rejecting tons of times to the upside. So this is a high liquidity or rejection area because price tends to push either to the upside or to the downside with very strong volume and rejects. So here we rejected this area, so you consider this yellow area as the first TP area for bulls in case you want to buy. But for the shorts we're gonna retest most likely 3015 because as you can see we also have tons of wicks and a lot of inefficiencies. I feel price was starting to target these two inefficiencies that we had in the previous weeks. This was 2 weeks ago and this was last week, so price already tried to push to that week. So this is the zone or the inefficiencies that provided this big push to the upside, but we already had the rejection. This means that bulls are not in control at this point, even though the technicals and the fundamentals are showing that price is bullish and gold should be bullish. This is a very healthy retracement. As mentioned in previous analysis, price broke all-time highs with little to none retracements. That's why I have this orange area, because this is the most significant retracement we have since this year new all-time highs, because we have all this area. This conflict is, or this indecision period is mainly marked by the waiting for Trump to be at the power and waiting to see if the tariffs and all of that drama was going to be real or if they were going to push it further like it's happening right now. So per economical factors and geopoliticals, we know that gold will be bullish, but also people don't want to get caught in these areas because geopoliticals are cooling off. We hope that they keep cooling off, and the recession or the trauma with possible recession might be also chilling, because reality is people don't understand things and tend to talk, and at this point we are on nobody's territory. We really don't have too much information because this is a unique scenario. Is the COVID still trying to recover, but we had multiples of wars, we had multiples of bank failures or scams in the crypto industry that is tons of liquidity. So we need to keep this in perspective, because really big investors won't like to buy here. Of course, as you can see, they already push price to the downside, because if price is bullish, the only thing that can make it go down is buying or selling pressure. That's what happened here. But as you can see, also bears are struggling to maintain the structure here. We had a very solid structure where we were creating lower highs, and as you can see, we never broke them until today, but we rejected fast. So if we go to the 4-hour or to any other time frame, this is a huge rejection. So price really don't want to go up right now. Like, they're waiting most likely for the GDP value or the data, because that's what can trigger the potential new bull move. Or if we get any hopes of the inflation going down or the GDP going, in this case, they have the previous at 2.3%, but if the data shows that the USA is recovering, or that we have hopes of possible recovery and sustained by the unemployment, the Fed will most likely give us at least 3 cuts this year. The expectation was at 2, but it's growing to 3, even though we have very bad data and that Trump is not supporting the idea. We might get the 3 cuts, and that will be very damaging or very risky for good investors that try to buy gold or they push physical gold. This is a very expensive price, so if the rates go down, you won't see these prices in a long time, because if recession and inflation issues cool down or even stop the FOMO, you will be trapped in a price that most likely you will never see. And dollar is not like gold, is not like dollar, so you will be having an asset that is very expensive at the price you bought it, but really won't be easy to sell or to get at that price back again. So take that in mind and have your positions very close to important areas. Don't try to get in, for example, here, unless you're scalping, because this red area is very hot for manipulation. And as you can see, you need to keep big stops at this point, but for now that will be it.